Hello everybody, Bali Trader back again, doing another Monday review, as we always do. So let's get right into it. We got some exciting things last week, talking about this weekly order block, right? This is going to be important. So, boom, this weekly order block, we said, okay, price looks like it's putting in the top here, it's going to react, boom, it reacted into a retracement because obviously we're bullish, so it ended up for the week. Now we're looking to carry on that same momentum upwards for the week, and let's just remember this 240. Let's pull it down a bit. Let's just remember this number, the 242 level, as we drill down on a lower time frame. We also did this level, the 276 level, as the upside objective. Now go to the daily. What do we see? I mean, looks pretty good. Personally, what I see on the daily is a market maker profile. Boom, boom, boom. And now we're in like the breakout stage. And we could possibly go up here, and we could possibly be headed up here to take out these highs. Taking out these highs would be pretty dangerous, and I think there would be a big movement behind Bitcoin if we were to break 300. What else? 4 hour. There's just another look at that market maker profile. The buy profile, essentially they're selling here so they can buy here and accumulate, and they're going to be looking for higher prices. But what I really want to look at is this area right here, this 242 level that I said to remember. This is a weekly bearish order block, but more important than that, it's just a sensitive level in the market, because that's where the big players are interested in conducting business. And so once that this 242 number fails, we were back here saying, look, we're at the order block, right? We break down market maker buy profile right here. And right, this is really sloppy, but we can see that this is excuse me real quick. We were looking at it from this angle, right? And so this is all we saw. We saw the market maker sell profile. So they're going to buy down here so they can sell up here. And the important thing to notice about this 242 level, the weekly order block, is that we only did a bullish retracement and then we took it out. And so now as price retraces back into it, we can see a little trend emerging where we are putting in higher lows, right? So basically we blast off, we retrace, we don't take out this low, we blast off, we retrace. Maybe we take out that low by a couple cents. We blast off, take out lows, retrace, we blast off, retrace. Now we're blasting off, and it's looking pretty bullish. If we really want to break it down, what we've got is another market maker sell profile. And so yeah, it's not necessarily that that they're selling, but here's the dynamics. They buy here, right? Because we're at a reclaimed order block, the 242 level, which was a bearish weekly order block. Now we are observing bullish behavior at that order block. So it seems as if the role of the order block has flipped, and we're just looking at that level as just a level of interest to smart money and big pockets. So they buy. It's not necessarily that they're selling here, but they are not buying here, right? Because smart money buys the discount prices. So as an absent of their buying, starts to come into the market here, they're going to be waiting for lower prices. So I would fully expect this to play out and at least be looking at 242 as a target for the next hour or so. I would expect price to dump into here off this resistance. Maybe it might only get to, let's say this order block right here. So let me put that in. Boom. Maybe it only gets here. But I mean, all this is leading me to believe that we're coming up on a very good buy situation. Very low risk, very high reward. Um, we have accumulated, or we have kind of consolidated on this key level, and it looks like accumulation to me. And like we outlined last week, in a couple weeks, high 200s are like the first objective for us to really be looking at. And everything's looking like it's set up to just 242 is looking like um, a huge, awesome buy zone with a stop at 239. What do you got? $3 stop loss on a huge potential trade. That's what I'm seeing, and that's basically all I have to say today. Trying to make it super quick because rendering these videos in 1080p takes a long ass time. So one last thing I want to show on the daily, just going over ICT, EMAs, and maybe like one of my concepts. So the green is the 9 EMA and the blue is the 18 EMA. And what ICT says is that the 9-18 EMA cross is a great cross to see if institutional buying is coming into the market. So you see this cross right here leads to all this selling. So if you just trade with on the side of the cross, in this case, the shorter term EMA is on top, which is a bullish indication. So if we just assume there is a institutional buy program in the market right now, then we are going to stay on the buy side and we are going to leave ourselves open to potentially catch the expanding moves upwards. More importantly than the cross is the stacking of the EMAs, which is just when the EMAs pull apart rapidly, which signals a very powerful buying in the market. You can see it here. When the EMAs start to stack, that's when we really get into some downward selling, and they're starting to stack right here. So we're looking for the upwards buying. Not to mention the buy profile we got going on here, which is ultimately looking to take these 300 highs out, which I think would just with all the news and everything might spark something much bigger. But then again, it could be a fake out, so I don't like to forecast too far in advance. I take it day by day. So yeah, another concept is the 14-day the 14-day simple moving average, which I like to use as a measurement of equilibrium in the markets, which is a pretty huge concept to me. And what I notice is that in a consolidation, usually we consolidate the closer we get to this 14-day moving average, the more likely we are to break out. So I'm thinking in a couple days we might be looking to have a nice move up, just because equilibrium is where I think all the moves start, but markets are not in equilibrium very much because, as George Soros, as I've been studying him and a lot of good traders, they say that the markets are not efficient and markets really are rarely in equilibrium because markets are always trending, and the trend really feeds off of psychology, fear, greed, human emotion. So as the trend gets stronger, people's belief in the trend gets stronger, and it just causes a whole bunch of mania, a whole bunch of inefficiency going on. And as the trend progresses, more people believe in the trend, which then strengthens the trend. And it's really important that we catch these equilibrium spots, which I have, one tool I use is the 14-day moving average. If we get close to that, that's a warning sign to me that, we're approaching equilibrium. We're approaching a point in the market where a trend might be forming, and you want to get there before the trend forms, because once the trend forms, people are going to see the trend forms, and then they're going to hop in, and then other people are going to hop in, and then other people are going to hop in, and it's just going to be like it's not retracing type of phase for Bitcoin. And yeah, that's all I got for this week. So until next time, good luck and good trading.